The Wall Street Journal. Dan, it's good to have you. And I think you've really hit the mark on something that the bears on Apple have been saying, which is people are paying so much more for profits today than they did going back, 5 years ago.
It was. And even just in the last 2 years, the PE has gone from 15 to a little over 30 now. So it kind of represents that investors are paying essentially doubling what they're paying for the same relative earnings power. And when you come into this period where, the App Store is under attack, we don't know how that's going to play out or when, and, kind of hype around the 5G iPhone that's been, I think, driving the stock a bit too. I think that kind of makes this new level more risky than the last level was.
What does the stock know that we don't? Why is it totally unflustered, given all the pressure on the App Store that we can see? Why it just acts as if it doesn't matter. The story's intact, and we're re-rating this thing as a services company with a subscription model.
The services re-rating has been going on now for, I think, arguably about, even since the last 1 trillion level. And that continues to build into it. I think if you look at the stock chart, though, this big spike that's taken place essentially since the fall goes into, I think, this idea that this 5G iPhone is going to come out. We've seen the stock kind of run up before on what people expect to be some kind of iPhone super cycle. I think that's a risky bet as well in this period because, 5G phones tend to be expensive. You've got a weakened economy and 5G coverage is still pretty limited. So I think there's just a lot of hype, and we've seen that hype in other big techs as well, especially Amazon, but even Microsoft, Alphabet, all these stocks have gone up a very large amount, even in this pandemic.
There's something as well to what's been going on with Apple this year. It's not like a company like Target or even like Amazon that has benefited from the digitization trends of COVID. This is a company that, if anything, a different analyst note I saw said they might have had their iPhone revenue hit by 10% from people deferring purchases and from the late launch of the next iPhone. So they're looking into next year, seeing the catch up from that on top of that, kind of the typical growth, and saying 2021 could be a banner blowout year for Apple. So again, it's almost as if COVID has been a headwind for the stock and its performance, and they're looking ahead to next year and saying this thing could really perform, at least financially.
It's certainly possible. I mean, the next iPhone is a really big question in my mind because, like I said, to me, 5G has been this kind of slow and a bit overrated in terms of a driver. Our own Joanna Stern found that you still can't find coverage in a lot of places. And yet you've got a lot of hype and this idea that this phone that's going to tap into these networks is going to sell really big. I think that's probably not going to be the case, at least right off. And then, with the uncertain effects of the pandemic, the impact on consumer spending, especially if government stimulus starts to lessen or go away, leaves a ton of question marks in my mind.